Gold prices volatile, trading right around $1,800 an ounce. Well, I need you to explain the landscape for gold for me. We had futures down at one point, down $20. Now they're down $2, but the spot price is up 10. What's this volatility telling you?
Well, the volatility that we're seeing coming out of Europe, particularly around the Italian situation, Italian government bonds peaking at new record yields, just over 7%, which is typically the danger zone for default and has led to countries such as Greece getting into trouble before. But right now that means that there's a risk-off day, so we're seeing a strong reaction from the US dollar, and gold, I think, profit-taking a little bit on the back of the 1800 high we saw in the last session.
Now, in terms of the risk-off trade and a rush into the dollar, a few weeks ago we would have seen gold down 40, 50 bucks on that as investors really need cash. So the fact that it's holding up, is that positive?
It is positive. I mean, gold's had a very strong move up to the 1800 high, which we saw just in the last session. And then on the back of this dollar strength we're seeing this morning, we're seeing a little bit of softening in the price. But yes, it's a good positive sign for people that look at the technicals on the gold charts.
And also, I wonder, what is high gold prices telling us right now about inflation worries out of Europe? I've been talking to a few sources who think that the European Central Bank will be forced to be the lender of last resort for Italy in order to save the euro, because as you said, we're seeing bond yields go over 7%. Do you agree with that?
I think right now, perhaps the more dangerous scenario is one of disinflation or even deflation within the European economy.
But couldn't you argue if it was deflation that gold would be selling off on that?
No, I think that in a sort of disinflation or deflationary environment, that's the safe haven environment that we talk about. That's when counterparty risk becomes elevated within the market. People worry about solvency of financial institutions and therefore looking for an asset which doesn't go bankrupt but yet still retains some liquidity, which is typically the two aspects which make gold quite unique. I think that you're absolutely right. If the ECB does intervene and become the lender of last resort and prints a lot of money, then clearly that is inflationary over the longer term.
Do you think that's going to happen? Are you in the camp that thinks they're going to have to print?
I think that it's pretty possible.
Okay.
And I think that they've done it so far. The ECB has been active in the bond market, buying up Italian government bonds and other bonds from the other European countries. So I think that as the situation deteriorates, the ECB will most likely have to act further.
All right, so what I'm hearing, Will, is going to be volatility. So gold prices are going to be volatile. Thanks so much.